The most recent Treasury Report is out and it reveals disturbing news. The net worth of the United States is now officially reduced to minus $21.5 trillion. The country's total national debt has catapulted up to past $22 trillion. Every month, President Trump's administration adds to the debt pile with multiple billion-dollar deficits. The real question is, can the government indefinitely sustain this debt fiasco? Economist and analyst Wolf Richter argues that the United States is in a select club of financially troubled nations. The U.S. shares the deteriorating financial position of countries including Italy, Greece, and Japan. It is true that Japan and the United States possess a single helpful advantage over Italy, Greece, and some other countries. The US and Japan have full control over their own currencies. It allows their central banks, like the Federal Reserve and the Bank of Japan, to literally print their own money in order to buy up government debt. In Japan, their central bank keeps aggressively monetizing the debt of the government. In 2018 though, the Federal Reserve has not been a buyer of US Treasuries. The end of the Federal Reserve's program of reducing its balance sheet may change this before long, but as of now, it is actually not the country's central bank making the runaway government spending possible. It begs the question, who is purchasing all this mountain of American debt and why? Answering the first question is straightforward. The total of all foreign investor holdings of U.S. Treasuries amounts to $6.4 trillion. Even after divesting some of their holdings, China and Japan are still ranked as the two biggest foreign investors in it. The Federal Reserve presently holds approximately $2.1 trillion of American debt. American-based institutions and investors have around $7.7 trillion. They remain the biggest single category of Treasury holders. A close second is the Social Security Trust Fund and pension funds, U.S. government entities. Between them they count almost $6 trillion of U.S. Treasuries in their holdings. The argument that this is money we borrowed from ourselves is deeply flawed. As Richter points out, this money is owed to those beneficiaries and it doesn't cancel out. It is a real debt that the U.S. government owes and it has to pay. Keep in mind that China has reduced its sum total of U.S. Treasuries by around $46 billion versus just a year ago. The two Asian giants of Japan and China have a combined total holdings of around 10% of American debt. This impressive or disturbing figure is still off of 2018's 11% total holdings that they counted last year. Over the past year, U.S. investors have bought up the lion's share of American government debt, approximately $1.2 trillion in just the past 12 months. This cannot go on forever, it is unsustainable. The perception that the debt does not seem to be having any real impact on the economy is false. The point of Treasury oversupply as government spending continues to run away looms large. When we soon reach that point, the American federal government will encounter serious problems and have to make tough choices. The buyer of last resort will remain the Federal Reserve. This amounts to continued money printing in the form of quantitative easing. Keep in mind that as Treasury demand begins to decline, it forces interest rates, across the entire economy, to go higher as a result of supply and demand economics. Is your retirement portfolio protected from quantitative easing and rising interest rates? In the end, the Fed will be left with two tough choices. Either they will have to cut interest rates and engage in more quantitative easing, which will lead to more inflation. Or they could simply do nothing and allow interest rates to skyrocket. Allowing interest rates to run wild would spell certain death for a national economy constructed on massive debt. Any way you look at the fiscal policies in Washington, the federal government is on a path that they cannot possibly sustain much longer. With inflation or significantly higher interest rates in the future, you need a place to take shelter from the gathering economic storm. Gold has the track record as the longest-lasting safe haven in world history. It has protected investors for thousands of years so that they could rest easy at night in the knowledge that their assets were safeguarded by the dependable yellow metal. Click the link below this video to obtain your no-cost and no-obligation gold rollover kit from the country's most trusted and award-winning gold retirement firm. The industry leader in gold retirement and alternative assets companies continuously strives to earn its envied reputation by taking care of its customers. Their 100% free precious metals investing report will ensure that you possess all of the time-sensitive information that you need in order to hedge your retirement account with a partial diversification of your assets into reliable gold. Visit our website at thesecureinvestment.com to get started.